Hi, evening all. Market just closed. It's Monday, 19th. So let's start off with the SPY. In my last video, I suggested we might go sideways and maybe close the gap from Friday's ugly close or the whole ugly day, which is what we've done. We've actually closed high of day, actually, something to take note of. So I'm looking at the SPY right now. We've closed the gap pretty much on the spot. Now, I do reckon we might go a little further since we had such a, a close and high of day, very strong, doesn't get stronger. So we could go a little higher and sort of test the ascending support. Doesn't have to be that precise because I haven't drawn the most precise ascending support, and it differs on each market, let's say. So here we're looking at techs, the Nasdaq, same sort of chart pattern. So closed at high of day. Here we closed the gap and some. So we went a little further. But we might have a little bit more of a push tomorrow. Dow, same thing. Let's test the ascending support. Russell actually never really flushed below the ascending support, really. I mean, it closed even on Friday within the ascending line. I mentioned that in my Friday video I must have done. So, and this is pretty standard where you have these sort of fake outs. Now, I wouldn't call it a fake out actually, because I think this is a legitimate flush on Friday. I think we are going lower ultimately. I did suggest that we might go sideways today and maybe, and I think I said 1, 2, maximum 3 days, go sideways and then touch what is now resistance, what was support, the ascending line, and then ultimately roll over. I think we're going all the way down, testing the lows and actually flushing it. I've said I've nailed basically the chart pattern since I started the video. So not to jinx it, but I'm on a bit of a roll. So that's what I think's happened with the general four indices that I follow. The SPY could go a little further up, test ascending, roll over. Nasdaq, same thing. Dow, same thing. Russell, same thing. The VIX closed red, which makes sense since the market's closed green. It was quite strong at some point today, testing 28 again. We failed though. 20 is strong resistance. I do think though that when we do roll over um, in the general markets, we will start testing 30, maybe 32. Although let's see how long it takes. But I think in 2 to 3 days we'll be doing that really. So this week, and remember Wednesday is a Fed speak day, so I don't think there'll be too much of a move tomorrow. I think the ECB talks that might move markets a little bit, since if they raise rates, then a bit of a currency war going on between the euro and the dollar, so that could move rates and currencies and therefore markets also. So let's see what happens tomorrow with the ECB, but otherwise Wednesday is the big day. So that's what I think when covering the markets. Let's move on to the yields. Now yields are totally inverted. You can see the shorter term yields are higher. Look at this, the 1 year is now above 4. That's pretty significant. I've started to hear other sort of pundits discuss it too. The 2 year is knocking on the door of 2%. The 2 year is a lot more significant than the 1 year. So when that cracks 4%, I think we're going to get more moves. We could start getting some black swans and some markets starting to break. The 5 year already broke out of its last high, and obviously the 2 year and the 1 year have already done that long ago. The 10 year is knocking on the door of 3.5. Today we ventured above 3.5 for the first time in forever. I mean, I'm not gonna count, sort of years and years ago as something relevant right now. I'm just talking about the local high. So we've cracked 3.5 finally. Very significant, close just below. I wouldn't be surprised if tomorrow we close above it. And the 30 years also sort of knocking on the door of its previous high. It's actually closed above it again. So yields are going up. This is the most important element to the markets at the moment. I mean, the difference between yields being at 4% and yields being at 0 point whatever it was a few months ago, 25%, is just monumental. You've just got yields going up so fast. Not fast enough to tame inflation, but so fast. And with all the debt we have, record debt, record government spending, student debt, loan debt, I mean, just mortgage debt, car debt. It's just, I mean, huge effects, corporate debt. So, I mean, the system will crack if this continues. It will continue because they have no choice. Either they smash the economy and the markets, or they give in to inflation, and that's the worst of all options. I mean, once you go to hyperinflation, that's it. So I don't actually think they'll be able to tame inflation. I think they'll try and then they'll fail. And then when they pivot, something that they won't do in a while, I think a lot of people are looking forward to the pivot soon. I don't think it will happen for months. But when they do, I think that's when everyone will realize, okay, inflation is here to stay, and then it will accelerate to high inflation. Not hyperinflation yet, but well, let's discuss that when we get there. But yeah, yields are going up. Even though the markets, because normally when yields go up, the markets go down. Today we had a bit of a sideways slash slightly up day, but yields continue to go up. And with yields going up, you can't expect the markets to continue going up. So I think this is really just sort of bouncing from the Friday close. But again, like I said, give it 1 or 2 more days of a slight move up, touch the ascending. It doesn't have to, whatever. But yeah, yields going up for me, long term markets go down. So that's yields. And also pay attention to the German yields. You know, you got to start paying attention to the European markets too. I mean, the American market's a lot more exciting, but the German 10-year hasn't ventured too high above its last. I mean, it hasn't touched its last high of 1.92, let's call it. But when it does, it will crack 2%. And then, yeah, then the DAX, the European markets will just be flushing down the toilet. And the Italian 10-year, pretty similar stance, you know, just below its last high of the mid-June, just like the Germans. But I wouldn't be surprised if, you know, they start taking it out. Let's see what the ECB says. Maybe that will be the move tomorrow. And maybe markets start to crash after that. Let's see. So yields, pay attention to them. The most significant market out there at the moment. Let's look at the dollar. Now, the dollar was feeling a bit toppy. I mean, it's just been going up non-stop. And it's not just since February, it's since, you know, last year. Just been going up and up since basically just under 90 all the way up to 110, even almost touched 111 at some point. But again, today it's just sort of a bit too much resistance up there. You can forgive it for just fading a little bit. I wouldn't be surprised if we just go down a little bit, but to be honest, not that much, because if yields keep going up, if markets keep crashing, the dollar is king. Everyone sells stocks and just goes to cash. So yeah, I just feel like the dollar is not the worst place to be at the moment. There aren't that many places you can be. I've heard volatility, bonds, cash. You can go short. I mean, you can hold what you've got, you know, if you've got the long-term play. But cash, and of all the currencies, the dollar is not the worst. So yeah, it's just a bit toppy, but then again, it's, you know, fundamentally nothing's changed. So I'm holding a lot of dollars anyway. So, but just something to pay attention to. So let's see. I mean, tomorrow with the ECB talking, maybe we will have the euro rise, actually, if they re-emphasize their dedication to raising rates. So you could have the euro up, the dollar down. But then again, the Fed speaks the day after. So, I mean, you can play currency strategies. You can say, okay, I want to be in cash. Let's say you have 100,000 in cash. You could say, all right, I'll have a quarter in euros, a quarter in dollars, a quarter in Swiss francs, a quarter in whatever, Japanese yen. I wouldn't do that, but at the moment, I'm 100% dollars when it comes to cash. But you could mix it up just to be slightly hedged on the currency side of your cash holdings. Anyway, dollar toppy, and it's still finding too much resistance at 110, and it is overextended. Let's look at gold and silver. So that was quite interesting today. Both formed And obviously the markets were up. So at the moment, gold and silver are acting a bit risk on, and it's been like that for a while. So they act the same way as the markets, not really acting as the safety trade they used to trade as back when markets started to crash in April, really started to crash. Because at that point, gold and silver were going to test 2000 with the Russian invasion, whereas the market started to tumble. And then as the markets really started to accelerate down, gold and silver were forced down with it. And since then, they've been acting in tandem. So that's still the case. So with the markets bouncing, gold and silver also, I wouldn't call it bounce, but well, actually they did. They just closed sort of unchanged. Silver was down a little bit. I think it was down 0.5%. It's reset since. But gold actually closed green. If we just zoom in, ignore the big circle, but basically, we started the day down. All the markets started down, and then we just sort of closed a high up day. So gold pretty good. It's retesting its. Let me just go back to this. And this happens quite a lot. So you flush down, and then you sort of go sideways, and then you retest the scene of the crime. So I wouldn't be surprised if we go and test 1700. Again, we have to pay attention to the ECB tomorrow and the Fed the day after, but otherwise it would be standard technical patterns for it to retrace its flush, So prior support becomes resistance. Now, obviously, 1680 was real support, and you can call it 1670. We closed below that on the 15th. We went sideways the next day, and then now we're sort of testing. I think we'll go a little higher. We could test 1700, maybe fail. But today was good. It was a strong day. Silver has been stronger than gold for several days in a row, several trading days in a row, especially since we broke out of this. We've covered it again today. Okay, today it wasn't stronger than gold, but again, given how far it's moved up and how little it's moved down, it's still holding this pattern. And if we break out, and it looks pretty, just to zoom in here, if we look at this, and if we break out of this little downtrend line, this is one of the most bullish chart patterns. It's one of my favorite ones. We break out of this and test 19, let's call it 19.65, and then take that out. We take out 19.7, that's very bullish. I mean, then we test straight away 20. And then we're pretty much guaranteed to take out 20 and then rise. Now that would need the markets, that would need the dollar to not be strong, that would need the markets to not be falling. But let's just say overall from this, silver is strong. It's relatively strong versus gold, versus the markets, versus the miners. It's a strong play. And for that reason, I've been in for the last 2 or 3 days. I've got 2 or 3 trading days. I've covered it. I sold the pop. I bought the drop, and I'm very happy with it. And actually, there's one stock in particular. Let's move on to the actual miners now. I'll cover the stock later because I actually own it. The GDX. Let's start with the GDX rather than the juniors. Now, this downtrend line, normally I would delete it because we broke out of it. It becomes no longer relevant, but it was a bit of a false breakout, so it remains relevant. And for that reason, I can see that it also closed just underneath the breakout of the downtrend line, which the last time I did that, it broke out, but then again, it was a big breakout. But all that to say, GDX is basically double bottoming. It's sort of, let's call it 23, low 23s. GDX seems strong. We break out of this, and you really sort of define a double bottom when you break out of it. So I still wouldn't suggest it's a breakout, but once we take out 26, then you can say, okay, it double bottoms. And we can still go lower, anything can happen. But for me, this is a strong zone. I've bought it. I didn't add anything today because I already bought this. I mentioned it in my prior video. But very, very good pattern. It was one of the strongest sectors, in my opinion, out of all my watch lists, the gold and silver sector. GDXJ even more so, which is standard when the miners go up, the juniors go up more. And just very nice and bullish, and you can see some stocks react pretty strongly. And this is just the bottom. You've got a long way up to go, but I don't think we'll go up too far because I think the markets will flush again. So what kind of a move am I looking for? Just to stick with GDXJ, 5-6% would be great. And that could happen if the markets go sideways, like I covered at the very beginning, the SPY, the Nasdaq, just up a little bit to test that ascending support. You could get the miners sort of testing the GDXJ, let's just say testing 32, at which point I would again sell what I bought down here. I'm constantly swing trading my core investment. So these sort of 10% swings is typical, and I've been doing that for years. It makes all the difference, and it's just something to look forward to no matter which way the market's going. There's always something positive you can do. So that's what I'm seeing. Now, just to go over the portfolio, start with the sort of senior GDX related stocks. Barrick Gold, same chart pattern as the GDX, bottoming at 15. I bought it at 15.01. Newmont, haven't bought it in a while because I bought too much on the way down. Very strong defensive stock. It was one of the strongest. I suggested it was the leader of GDX. It wasn't the strongest mine in GDX, but again, still strong. You can see it is testing and arguably closed above this descending line. So very strong. If we have further movement in GDX tomorrow and the day after, which I think might happen, we could have this test 46.50. That would be great. So very strong chart pattern. Newmont is very, very strong relative. Very happy with I've got too much of it, but very happy holding at the moment. Agnico Eagle used to be very strong, but has come down since the sort of back to reality, despite it having great news and being a great stock. Let's see if we can move back up to this descending line. That would require a bit of a move though, 4, 5, 6%. So I'd probably trim some there. I think I'm looking for a 5% move thereabouts. So recently has been a little bit weak, but otherwise a great stock. So Wheaton still hovering near its lows, just generally following the other pattern of the general GDX. Pan American Silver sold the pop perfectly here, in line with this. Bought the drop the other day. I think I mentioned it. Let's see if it can go back to this zone and even break higher, at which point I'll probably sell the descending line. I need to reposition these. Something like this. If it goes higher, gap fill here. I need to clean up these charts a little bit, but yeah, this would be the first area. I'd sell half of what I bought down here. If it keeps going, I'd sell the other half. And if we have a further breakout, there's probably something else going on, but I'd keep selling into it. Mag, it's good, stronger than the others. Higher low on the double bottom. Again, higher low. I'd still sell into it. I just missed a sell here though when it was moving up. I was a bit greedy going for 14, missed it. I was busy with other stocks. That's the downside of having too many stocks. You divert your focus and you can't nail every trade. And for that reason, I didn't buy here. So a bit upset. This was a sort of swing I missed. But if it goes back here, I'll sell some at least. Yamana, I doubled my position when it back here. I've actually, I rarely do this. I bought both tranches in the same area. It's just I know that there's a merger going on with GFI soon. I forgot when. I thought that it's guaranteed to be priced higher. So, and it's a good stock. And it's a nice move today, 3%. I think I'm overall at the average buy-in of both anyway. First one was 4.31, the second one was 4.24 something the other day. So I might be up a little bit. GFI, I'm down on. I've been buying, creating a new position in this channel, but great stock, so no problem. Absolutely don't care. First Majestic traded it very well in these ranges. Sold this pop up here. I think it was 50 or 51. I didn't think it would break higher. I did buy the other day at 780. So let's see. I'll probably sell this move again. Half of what I bought down here. If it keeps going, I'd probably sell the other half here. Fortuna, basically I added to the silver stocks, but I missed EXK. So Fortuna bought that. This is looking great, actually. Again, if we ignore this breakout here, which is a false breakout, then this trend line remains relevant. So this could really breach. Fortuna looks great and really good company. Look at this coil down here, could really break out. But then again, you need all the elements working together for that. So I always sell the pop. EXK, I missed the sell and therefore didn't buy back, but still looks very good. Great stock anyway, so no problem there. CDE, I've been trading that perfectly. This pop here, I remember I sold just as it was breaking out of this descending line because I was too heavy in it. Then it really moved. It was a shame I didn't sell then, but then I did sell my second tranche, so I sold both. I should have held back on both just to sell here, but I didn't know it would do that. Bought because I sold so much, I bought back. And then today there was some beautiful news. I think they sold one of their assets for 150 or 200 million. Didn't read into it too much. Just, you can understand the story and the reaction of Wall Street by just looking at the price action, and it is beautiful. Just constantly moving up the whole day, even when the miners started to break down. It kept moving. I actually sold a small amount at 304 way too early. I saw the market sort of reversed and I thought, okay, we're going down. Kept on going up. Then I saw it 329. And then high. I mean, all the markets just closed a high of day and I didn't sell anything further. I'm going to hold what I've got. I've still got a lot in CDE. So just looking for that move even higher. I would normally sell at three, probably 49 just to make sure I'm out. But at this point, it's so strong. If we move higher, I might go for 4. So let's see. But great reaction to the news. TPRFF, I covered that. I bought again down here. Normally I don't buy triple lows, but it's just good news. It's a good company. I just know the stock quite well and I like what I know. So I'm very happy to see that go up to TGLDF. Usually it's closed today. It started to move up again. Got a bit of life here. Maybe we can go into the 20s. TPXXF, nothing really to speak of. Didn't really trade much. FTCO, I bought at 601 and I've left it because I feel like I bought this range, and if it goes lower, I'm happy to buy more. I don't own too much. And finally, Reina, I'm looking for a move higher because that's had good news recently. Plus the market's going up, so it should be able to venture into the 30s. That's it for the miners. I won't cover the others. They're just my alternative stocks. I'm only going to do one video, so let me quickly go over crypto. Now that obviously follows the general market, so we've got another hammer here, just like we do in we don't have a hammer in the general markets, but given crypto trades 24 hours a day, sometimes its candlesticks look a little different, but basically it moved in tandem. It just closed a high of day after opening with the markets low. Ethereum also a little stronger after being a little weaker. I consider Ethereum like silver and Bitcoin like gold, actually, sometimes. Bitcoin dominance, something I covered in my last video. I thought that it would actually go higher. Today it was a bit weaker, but with what happened throughout the day, Bitcoin dominance sort of closed flat. I feel like if the crypto markets go up, Bitcoin dominance could go green. But I was also under the impression if Bitcoin goes lower, then Bitcoin dominance would also go green. I don't think you can have it both ways. I'm not sure what to think of it, actually. I just feel like keep it simple, and if the markets go lower, Bitcoin will go lower. And let's just go back to Bitcoin here. This for me is this very weak chart pattern. It's flushed, it's gone up, it failed 25. Ascending chart patterns, the weakest. It flushed it, it went down, the market went up, so it went up with it. Big drop on CPI. And now it's just sort of, it's all over the place. Still in the downtrend, long term. medium term, almost even short term. I just feel like we'll go sideways, maybe go a little higher. But otherwise, on Wednesday, when the Fed speaks, the party's, over and we go back down to 17,500. If the market goes down also, which I think is the case. So I'm only in Hive, the crypto miner. I don't own much at all. I think we're going to go lower, just like I do in all the markets. So I'm not really touching it. I did think we might go sideways a bit here, and we did react a little stronger than I thought because the market's closed at the high of day. But let's see. Otherwise, I just feel like we're going sideways to lower. So, and therefore it's the same with everything. Ethereum weaker now. It used to be stronger, but it was sell the news on the merger. Here we just about closed above that flush low, but again, we'll just probably go sideways. And if we go down in Bitcoin to 17,500, we'll go to 1,000 in Ethereum. And I'm sure it's the equivalent in all the alternative coins. So that's my take on the crypto because it coincides with the markets. I don't need to go much more than that into it. Otherwise, good luck and see you tomorrow for another video. Yeah.